if the interest rates rise, bonds fall. Bonds are fixed income instruments used by companies and governments to borrow money from investors to raise funds for specific projects. In return, the government or the company pays back the investors' money with interest over time. Who are these investors that the government or the companies borrow money to raise funds from? That investor can be you, that investor can be anyone who's interested in investing or in borrowing a company or a government their money. If you do so, then you will be called an investor. And by giving them your money, you will be purchasing a bond from them. Why is it called a bond? Well, it's called a bond because it binds you, it bonds you with this government or with this company until a specific period of time. Bonds can be a 2-year term, a 3-year term, a 5-year term, or a 10-year term. And for the period of that term, you cannot take your money out because your bond has not reached the maturity stage yet. But after 12 months, they can allow you to withdraw your money. If you withdraw your investment prematurely, be aware that you will lose all your interest. It's not worth it. So whenever you decide to purchase a bond, go there willingly to be patiently waiting until your bond reaches its maturity stage. There are so many benefits in investing in bonds. Bonds are one of the safest ways of preserving your trading profits, business profits, salary income, instead of putting this money into your bank account and you call it saving, but it's just sitting there and doing nothing. Whereas if you are investing in bonds, it can generate even more money, more income for you. Bonds carry less risk and they can be a good choice for investors with less time to recoup losses. And it is the perfect way of starting investing because I mentioned on the other videos that they are not drastically moving like stocks, or if you are a forex trader, they are not that moving. So they move slowly but surely into your direction or against you. The second advantage of investing in bonds is its income generation. Some bonds provide fixed income amounts at regular intervals in the form of coupon payments. As I did mention on my past videos, there are several types of bonds and they all come with different benefits. Some are tax-free, some come with fixed payments, some come with this, some come with that. You're just going to have to decide which one works for you and stick to it. If you have enough funds to diversify, which I always advise, go ahead and do so. Which leads us to the third advantage or benefits of investing in bonds: diversification. Investing in bonds, stocks, trading, and other assets such as shares can help you build a very strong portfolio which seeks returns but resilient on all market environments. I did mention on my previous videos, please check the description box for my previous videos, but I did mention in one of them that if the interest rates rise, bonds fall. But if the interest rates rise, then you can take advantage in that if you are also trading bonds, not just investing in bonds, but trading in bonds. You know that if the interest rates on this day are rising, you can take a sell position and make money trading just bonds. So you see that you are making money investing in bonds and you are making money trading bonds. You are also making money in your stock investments here. You are also making money in your shares there. So that's a very wise move because you get to make several streams of income in different markets. So even if one market falls but the other one is rising, you can never go wrong with diversification. we move. The next advantage is their risk management. Fixed income is broadly understood to carry lower risk than stocks because fixed income are less sensitive to macroeconomic risks such as downturns and geopolitical events. Well, now let's talk about the risks of investing in bonds. As with any investments, buying bonds carry its own fair share of disadvantages. And the first one is the interest rate risk. As I did mention earlier that as the interest rates rise, bond prices fall. Interest rates movements are a very huge deal in the bonds markets because they play a huge part in the market's volatility. And if the bond prices fall because of the rising of the interest rates, you may end up losing all your interest, including your initial investment. The second one is the inflation risk. Inflation is the rate at which goods and services prices rises over time. If the rate of inflation outpaces the fixed amount of income a bond provides, you as the investor will lose your purchasing power. The next one is the credit or business risk. The possibility that the issuer is the government or the company that you borrowed money. So the possibility that the issuer could default as its debt obligation, in other words, may fail to pay back your money, which does not usually happen depending on the type of bond that you took and who you took it from. The next risk is liquidity risk. That is the possibility that you as an investor may wish to sell your bond before it reaches its maturity stage, but you are unable to find a buyer. If you are a forex trader, you know that in order to buy, there must be someone to sell. Because how can you buy without a seller? And it's easy in the forex market because you can buy and sell anytime because the liquidity is too active there. It's a different thing when you are approaching the bond investment side or the bond market, because there you are not allowed to just sell a bond anytime. That is why we have maturity stages. And before you purchase that bond, you must be willing to wait until your bond matures. So you cannot just sell it anytime, because the buyer may not always be available to buy. We make a lot of videos teaching people how to trade forex, and we don't come back with videos educating people how do we sustain the money, preserve the money that we obtain from forex trading. How are we dealing with SARS? How are we taking care of all that? And so I'm so excited that I'm sharing this journey with you so that you can also take a stand when it comes to your financial situation, as I'm doing the same on my side. I'm just a forex trader, not a financial advisor, but we do need more of this education and more of this knowledge in South Africa because we don't get to learn these things in schools. So how do you think about this video? May the peace of God rule in your heart. If you enjoyed it, press this thumbs up button. Don't forget to press the bell notification icon so that you'll be notified when I release my next upload.